So yeah, so just to start off, I was wondering if you could just talk about, kind of how you got into finance. What was your background? Were you a business major? It sounds like you weren't. Um, and what you currently do and how you transitioned into that role.
That's a big question. So,
Yeah, sorry, there's a lot.
okay. So Naeem, I grew up outside of Philadelphia and I played competitive tennis and played tennis at Yale University and then played on the Satellite Pro Tour for 2 years and then had a tennis business and coached tennis on the NCAA Division I level at Columbia University and Barnard College. And I had, after my tennis coaching career, I had a web consulting company. And not that I was the techie, but I was proficient at translating what a client or potential client wanted to our techies and came up with solutions for them. So that was in the 90s. And then 9/11 happened, and I decided that this was not a passion of mine. And at that time, I saw an ad in the Wall Street Journal that, as I remember it, although it may be that I'm remembering incorrectly, but perception, this was my perception of it. It said, educators, attorneys, accountants, and I think it was entrepreneurs, come learn about being a financial advisor. And at the time, that was for Merrill Lynch, and it was at the Fifth Avenue office in New York City of Merrill Lynch. And I felt as though that's what I want to do. And the reason I knew that was because I thought this was about educating people in a very important area of their lives. And I was used to coaching, and I thought this was a shift in who I was coaching. So I started at Merrill, and no, I majored in American Studies with an area of concentration in women's studies. So I thought I had to make up for some lost time and studied for and got my CFP, Certified Financial Planner designation, as soon as possible. And what I mean by as soon as possible is there are 6 courses that you study and then sit for a 2-day exam. I thought it was really difficult. All multiple choice. I took courses in college where I could write essays. I did not even like exams. So it was very different to be sitting for these exams. And I got my CFP even before I was allowed to use the designation, because you have to have been in the business for 3 years to use it. But it really provided me with a foundation that was critical for this business. And I gravitated towards the estate planning course of it. And I think that was because many of the solutions for wise estate planning are philanthropic solutions. And I was sitting on some nonprofit boards and really was interested in the philanthropy plans of potential clients and how they fit into the overall financial picture. So I then also at the same time, I had a young client who was, should I put that on mute for a second and then we'll pick up, because there's clearly somebody at the door.
Okay, yeah, that's okay.
All right. They didn't buzz again. So, okay. Or maybe they're there. I don't know. Sorry about that.
No worries.
What was I just saying? I don't even remember.
You're talking about you're sitting on boards.
Oh, so I was sitting on boards, and so I was interested in the estate planning part. And I looked specifically for philanthropic clients. But one of the clients I started to mention a minute ago was this young client who actually I had coached when he was in high school, coached tennis. And he was always interested in doing good for the environment. And after he was out of college at this point, he had inherited some money, and he came to me, and he said that he wanted to invest in what was then called socially responsible investments. And I said, okay, Glenn, but just know that you'll need to sacrifice returns for socially responsible investments. Financially, you'll have to sacrifice financial returns. And he said, that's okay. And I said, okay. And then we started to, and there weren't many choices of different funds, but there were some. And when we started to do our portfolio reviews, I realized he was doing better than those who were invested in traditional investments. And that was a light bulb moment. And I thought, I should look more into this for others. And so we started doing what has morphed into from SRI, socially responsible investing, to ESG, investments that focus on the environment, social, and governance issues. And it's currently called ESG, or also some people call it sustainable investing. Some people say it's impact investing. Impact investing often doesn't look for financial returns. For all of this, I'm seeking first and foremost for clients strong financial returns. But at the same time, we all want to have a social impact, and whether that's improving corporate behavior or doing good for the environment or taking into consideration the water shortage issue around the world. So there's so many different funds and individual investments that somebody can make to either reward companies that are doing the right thing, or in the old days, it was about screening out wrong companies. Now it's more of a combination and more of having a say directly to corporations that you own equity in. So now I don't know if I'm getting ahead of myself. Does that answer your question?
Yeah, absolutely. And, feel free if there was anything else you want to add too.
Well, it's now morphed into not just about ESG as a whole, but really a subcategory, a subset of focusing on gender and diversity and social and racial justice. So it's morphed because there are more choices and there's more of a apparent need to set companies on a better path, better path for all of us, for all of society. Mm-hmm. And I really do think investors can have a difference by having a say, and they can decide if the say is just by an investment or if it's by their vote within companies and voting their proxies. And it could be going in front of Congress. And we do invest in some fund managers who do present to Congress. And I'm so excited about it. I'm going to tell you about a big win. Okay.
Okay. Yeah.
Okay. So it just happened. It's a week off the press. In fact, I think I'll send you the last week's, our quarterly social impact commentary. So, but I'm telling you the punchline, which is one of our managers works really hard to, or had a campaign basically last year to stop the practice of companies having non-disclosure agreements, NDAs, when employees would complain of sexual harassment. Mm-hmm. And an NDA means that when someone comes into work at an organization, they sign a non-disclosure agreement. And so they are then bound by that non-disclosure agreement. So let's say there's a settlement at the company based on that sexual harassment that transpired. They can't tell anyone about it because they have a non-disclosure agreement, and they've signed that when they've entered the workforce at that business. And so these were, and up until recently, were prevalent. And there were huge settlements at different companies, and the victim could not disclose what happened. Either that there was the settlement, or there were certain pieces of information about the non-disclosure agreement. So, the manager that we use specifically was going in front of Congress on this issue to end the practice of non-disclosure agreements for sexual harassment complaints, settlements, etc. some of the things that we do, which we say to our clients and investors we will do, is make some connections that help move the ball forward. So I made the connection between Gretchen Carlson and the fund manager, and others were going in front of Congress as well. Anyway, they won. We won.
Wow.
And it's now awaiting President Biden's signature. And non-disclosure agreements will become a thing of the past, meaning illegal, when the issue is sexual harassment.
Wow.
And next will be, let me give you the preview, the next will be on racial harassment.
Right.
So,
wow, yeah, and that's a great example too of how, you can have a voice with just, some people might think it's a very, trivial thing to invest in a company or to buy a product from a company, but clearly there's an impact there as well.
yeah, no, really, it really was. And some of these things take a long time, and some don't. We've started. So when I said we do more investing in gender and diversity, while we do comprehensive wealth management for our clients, we also provide two specific portfolios, one our gender parity strategy and the other our diversity and inclusion strategy, which is in partnership with Refinitiv because it's based on the Refinitiv Diversity and Inclusion Index. And so both are geared towards how do we change corporate behavior? How do we reward companies that are doing the right thing? And again, we want to have investments be aligned with our clients' values, because we do think the match makes sense. And if you think about, let's say, a foundation, a private foundation, investing their own money to do good for the environment, and then all of their other investments are in large oil companies. I mean, there's a real mismatch there. Mm-hmm. So they're paying attention to the 5% in this country, the 5% that they need to grant out, but the other 95% might be invested in a manner that's contra to their values. So, and then the other thing is it makes sense financially because it's a big risk to invest in companies that are not doing the right thing. And as we said, some company may have a lawsuit where they have to pay out $60 million US.
Right.
That hurts a company.
Right. And it seems that going forward too, I mean, especially, I'm specifically interested in the environmental side of things. And it seems that even going forward, companies are going to be rewarded and are going to have an easier time transitioning into whatever our future is going to be, because, we're going to have to learn to live with the environment and learn to manage it and take care of it better. And so there'll be an easier transition, and these companies will have to spend less money and be more profitable in that regard as well.
Right. You're absolutely right. And they really need to be forward thinking. I mean, we want the land to be here for you.
Right. Right.
So it would behoove us to do something about it.
Exactly. Absolutely. So kind of going back a little bit, you had mentioned when you first were approached by your former tennis player who you had coached, and he was interested in getting in responsible investing or sustainable investing. Was that the term that you used? Yeah.
Yeah.
So, it seemed that even back then, there was some misconceptions about, you're going to have to trade off, returns for good ESG or good sustainable investing scores. So I'm just wondering, in your time in finance, what has the transition been like in regards to moving towards ESG? Are more people trying to incorporate it into what they do? Did you see a lot of pushback from the firms that you were working with and working for at the time, and now they're more willing to accept it? Or kind of how have you seen the growth of it so far?
It's grown exponentially, and you can get the latest, and I should have them, but the latest numbers from US CIF in terms of the number of dollars in ESG investing, because last year it was 1/3 of all assets, all managed assets. My sense is the real question is, when will it be 100%? Mm-hmm. And I used to say the question was, when will it be 50%? Mm-hmm. But I think that it's moving really rapidly. And just anecdotally, clients sometimes come to us specifically for ESG investing or gender lens investing.
Mhm.
And initially, when we would tell people about our gender parity strategy, they were not, we started it because research showed that companies that had more women on their boards and more women in senior leadership had stronger financials. So we created the gender parity strategy, where we invest in companies that meet our financial criteria. This is publicly traded companies that meet our financial criteria, and every company we invested in had to have a minimum of 3 women on its board, because that was the magic number in the research where there was real advantage. And if you think about it, and there's been a lot more research since then, but diverse teams can outperform. You know, a diversity of thought, a diversity of backgrounds, diversity of gender, race, ethnicity, disability, LGBTQ. So initially, clients and potential investors didn't doubt the research. They just thought, well, this sounds new. I mean, this was in the end of 2012. And then within a few years, we would start to bring it to clients that were not necessarily interested in ESG or hadn't brought it up. And I just said, you know, it might make sense to add this to your portfolio because there are strong financial returns so far. And we're also having a say in the movement to get more women on boards in the corporate world. And so I do remember one client saying, well, why wouldn't I invest in it? Because I was saying, I kind of feel remiss by not telling you about it.
Right.
And he said, you know, well, why wouldn't I invest in it? And I said, well, I don't know. So I think that, you know, that conversation was probably in 2014. And it's just, I just think most asset management firms, at the very least, do some kind of ESG overlay to what they're already doing in terms of stock selection. So, and as you said, you want to invest in companies that are focused on these issues and that are moving forward. Because there's not that much time actually on some of these issues.
Right. No, I mean, it's great to hear that people are, you know, coming to you increasingly saying, you know, I want to invest in, you know, something, or I want my money to go towards these companies that are doing the right thing. And, you know, hopefully that continues going forward. So this,
I think it will. I don't mean to interrupt you, but
no,
I really
absolutely,
think it will. I can't imagine going backwards.
Yeah, absolutely. Yeah, no, it's great, especially if the returns are there as well. You know, I've always thought that, you know, ESG and being environmental sustainable is great. And there's a lot of people who want to do it just for the sake of it being good. But I think that ultimately it'll come down to, can it be a profitable thing? And that's how companies, and unfortunately or fortunately, like that's how our you know, economy, and that's how our kind of society is. And so once it becomes profitable and once it becomes a financial benefit, that's when we'll see, I think, a large scale you know, transition. So this is going to be in a newsletter for this ESG club that I'm in, and most of the people reading it, I would assume, are going to be, you know, people like me, people who are you know, university students, maybe master students, who are interested in environmental investing, impact investing, ESG investing in general. And so, you know, we may be doing some research and, you know, staying up to date on the news, looking into a couple of companies here and there, maybe investing, you know, in a few stocks here and there, or funds. But most of us probably won't be having financial advisors investing our money for us at this point. So given that, what advice would you give when, you know, just to an individual investor like me, or, you know, my peers, when we're looking at a company? How do we say, okay, this is, you know, a sustainable company, this is a socially, you know, positive company?
Wow, you have to dig a bit. I thought you were going to ask something else. That's why I'm thinking about it. I think, are you familiar with As You Sow? by the way?
I'm not, no.
Okay, so let me say what I thought you were going to ask, and then let me go back to the question
Okay,
you
yeah,
asked. So
absolutely.
what I thought you were going to ask is where to go for information,
Yeah.
period.
I mean, that
And I
would
would
definitely
say,
be part of it as well.
okay, I would say US SIF
Okay.
has a good primer on investing,
Mhm.
ESG investing. So it's ussif.org.
SIV or SIF?
SIF. So it's I'm forgetting what it stands for. Sustainable
Okay.
Investment Forum. So US, like
Uh-huh.
America, US SIF, Sustainable Investment Forum.
I see. Okay.
So, but it's ussif.org.
.org. Okay, great.
And there are great primers there. Um, and As You Sow, I believe it's asyousow.org, is also a good place to look and also invest, make investments. Because then you have others helping you with the determination on companies as opposed to doing all the research yourself. In terms of the research yourself on individual companies, it takes time. I mean, it takes getting research reports from analysts. For us, it also takes looking at, I mean, it could for you as well, looking at board composition,
Mhm.
and those kinds of things you can get from Morningstar,
Mhm.
and executive composition. You can also, as part of research, is look at what companies, what their controversies have been in the past. And I know that's a bit negative, but it's also seeing what companies have done as a result of some negatives.
Yeah, absolutely.
For example, we're invested in a gold mining company. You might say mining, that's horrible for the earth, et cetera. And we listen to investor calls and what the company does about safety and what they're doing to enable to bring on jobs in places in the world where there are people who would not have any livelihood at all. And we decided that the good really does outweigh the bad. Now, we also know that one of the people on the board is the head of sustainability at the Kennedy School, so corporate sustainability. So there are other pieces to dig for.
Mhm.
The other thing is, I do think that what might be sustainable to one investor is not so sustainable to another investor.
Mhm.
And I think that once you're investing in publicly traded companies, that's just going to be the way it is.
Mhm.
And I know a lot of people are concerned about greenwashing,
Mhm.
and that is an issue. But I also, again, think that looking for perfection, I just don't think perfection is going to happen.
Mhm.
And I've said to some people wanted there to be certain metrics for everything about sustainability. And there are different ways to measure. There are different companies like MSCI puts out its ratings, Refinitiv puts out its ratings, Sustainalytics puts out ratings. So although I think MSCI may have bought Sustainalytics, but at any rate, there are these different ratings companies. But I've talked to some people who have said there needs to be one place and that's it, and that everybody just knows this company is or isn't and what their number is.
Mhm.
Just the way we know by financial returns, what the number 12 means. We all know what that means, but we don't necessarily know on sustainability. So and that's an ideal, and I think that that's a great ideal. But if we wait for that, we'll just never get there. So I feel as though some of it, obviously, a lot is subjective, and what's in our portfolio may not be in somebody else's. Obviously, isn't in.
Okay, yeah. So we were kind of talking about, you had mentioned, some people want kind of like a one source where you can say, okay, this is a sustainable company, this is not a sustainable company, this is their, social score, or whatever. But you were saying if we wait there, it'll wait to get there, it may not ever happen.
Yeah, so we just have to be pragmatic about it and get going, because we can see the results. And we have to move. I mean, we belong to something called the 30% Coalition, which may make sense for you to take a look just at their website.
Okay, yeah.
And it's spelled out 30, the number 30, and then percent is spelled out,
Okay.
.org. And it started over 10 years ago, and which was right around the time we were starting the parity portfolio.
Mhm.
And if you want to look up about the parity portfolio, it's that's how it was known then when we were at Morgan Stanley.
Okay.
So it's in the press as the parity portfolio, and which became the gender parity strategy. So at that time, 10 years ago, 16.9% of board members of the S&P 500 were women.
Wow.
And we joined the movement, and I thought, wow, what if that number goes back instead of forwards, and I thought, yeah, I would feel like that's a hit, as if your portfolio lost financial returns.
Right.
If the movement lost social returns, that would be a negative. So now the number is over 25%. We're approaching 30%, which is big. I mean, I was going to say huge. It's not huge. It's big. Yeah. It should be 50%. That's why we started what was called the parity portfolio. Parity means 50. But if nothing had been done, and there are major institutional investors who are members of the 30% coalition pressuring companies to get more women, and now more women and people of color on boards. And if we had just waited for there to be one hub, I don't think that number would have moved.
Right. And kind of also touching on something you had mentioned where, social or impact is kind of, it means different things to different people. Do you think that as a result, it wouldn't work to have one kind of score? Because for some people, a score of that, whatever it is, 50 may be good, but a score for other people may not be good. And so there's really no way to standardize it.
I think some things you can standardize and some things you can't. So it's just really different. Yeah. But I do think measuring is important. Transparency is important. If you're not transparent about something, you can't improve something. So I think transparency and measurement, and the more tools that can measure, the better. I mean, we use certain software to measure different ESG. Hold on one sec. Sorry.
No worries.
Okay, so if you can't measure it, then, or if you don't measure it, then there won't be change, I think. And so we're using software that measures things like how many companies in our portfolio had non-disclosure agreements compared to the benchmark. Mm-hmm. And so, but waiting for the perfect tool is just, and I don't mean to be a pessimist. I'm optimistic that we have to just get going and move things, because things can change.
Right. No, that makes sense. And I think it's important, especially in things like this, it's important to be, optimistic, but also realistic and say, what can we get? How far can we go? And, let's not, aim for the gold. I mean, let's aim for the golden goose, but let's not hope that we're going to get there, or know for sure, that we're going to get there.
Right. And exactly.
Makes sense. So really, that's all I really had prepared. I appreciate you taking the time. If just any last thoughts for people who are getting involved in this area, maybe some people may be reading this newsletter and, they're interested, but they aren't really that deep into ESG investing. They don't know where to start. Just any advice you might have going forward for us?
I just think if you provide that link to the primer on ESG investing from US CIF, I think that will be really helpful for people. I mean, really helpful. So, that's really it. I think, that is, to me, that's the hub. That's the trade association for us all practitioners. And I think that the more we can support the trade association, the more we can learn, the better jobs we can do.
Okay, perfect. Great.